Welcome back to Financial Clarity for Doctors, everyone. This is Rachelle Vanderzanden here with Corey Janoff.
I'm here too.
Woot woot. Okay, we're going to talk about disability insurance today because it's important. We talked about it a few times in the beginning, and you can rewind all the back, way back to episode 20 or whatever it was. But it is a really important topic, especially I think for many of our clients who are fairly young, have a lot of income to earn in the future that they haven't earned quite yet, and aren't ready for retirement. Like if you need your income, you might probably need disability insurance. That's kind of what it comes down to. So, we're going to talk about some basics of disability insurance. We're going to talk about some little anecdotes of why maybe you need it. We're also just going to talk about like when you should get it, what it is, like what the features look like. It's kind of a complicated insurance, honestly, so if you are looking into getting it and you haven't had it before, it's worth talking to an insurance agent that can kind of like walk through all the details with you and help explain it to you. But it's definitely one of those really important things that no one likes to think about because no one wants to think that they're going to be disabled at some point in the future. And hopefully you won't. But if you are, this is going to be something that's really helpful to have in your back pocket.
For sure. Well, also, if you already have disability insurance, congrats, thank you. You still can listen because we'll chat about when it makes sense to increase your coverage and when you can cancel your coverage, which is the dream. You're
Mm-hmm.
financially independent. You don't need to protect your income anymore. So, um, but let's see. Scare tactics. I'll tell you a few stories here just to try and convince you need disability insurance. But I mean, we all probably know someone who's gotten sick, gotten injured, etc. Like I know someone who had her hand injured in a car accident. These are all doctors, by the way, that I'm gonna share stories of. And was able to return to work, thankfully, but not. It slows her down a little bit, so she's collecting a residual claim on her policy. A residual claim is just a fancy word for partial benefits. So, partial benefits based on the loss of income resulting from the loss of efficiency, um, the reduction in income as a result. Um, I've got a gal currently on claim um, for an illness and she's working part time as well. Ended up changing jobs to one that would allow her to just to still work basically because the role she was in previously wasn't really going to work out with her condition. But so she's collecting benefits and getting an income, win-win. Um, I know a surgeon who had a seizure that was worried if he was, luckily it did, he had to take a couple weeks off, kind of do some tests, et cetera. It was a one-off incident, but he was worried at the time if he was diagnosed with epilepsy, he wouldn't be allowed to operate anymore. And fortunately, like I said, it was a one-off incident, but he was, very appreciative of the fact that I encouraged him early on to get disability insurance. And, he's, he knows the value of it. I saw his income flash before his eyes, or the disappearing of his income. I know some of you have heard me tell the story about my dad, who, when I was younger, he had a compressed nerve in his neck that would make his hands go numb throughout the day. And if you're a surgeon, it's kind of hard to operate with numb hands. So he was collecting benefits for about a year until the issue got fixed, fortunately. So he was able to get back to practicing. And met with someone recently who's currently collecting benefits for a mental health claim. And mental health benefits typically only last for up to 24 months or until you recover. But those ones are a little typically more limited. You're not gonna be able to go on lifetime, or I guess full benefits for the full benefit period for mental health reasons. It's usually a 24-month maximum for that one. But still, people have stuff going on, can't focus on work, need to take some time off. So
Mm-hmm.
it can be handy if you need to take an extended leave due to mental health reasons.
Yep. And some policies do have like unlimited mental nervous coverage. It's just not common and is more expensive. But yeah, so I think when we think about insurance, we don't need insurance for everything. We just need insurance for the things that would be a really big deal if they happened. So if you're thinking about, do I need this insurance? It's helpful to ask yourself, like, if this happened, how would it affect me and how would it affect my family? Would it be something that we could just kind of figure out on our own? Like, if you break your TV, yeah, you can go get a new TV or deal without it. Like, don't have a TV, like, whatever. Like, that's not gonna be a game changer for you financially or for your family. But if you can't work and you can't earn an income, that's a big deal. Like, that's gonna be a huge impact on your financial picture. So those are the kinds of things that we need to look at. I think another example is just with car insurance. Like, you're maybe not super likely to get in a serious car accident, like maybe a fender bender, but like a serious car accident, like hopefully that never ever happens. But if it does happen, you better have some good insurance because we want to make sure that we've got coverage for liability if it's our fault and if we get sued. We want to make sure that like if there's any health consequences for people that don't have health insurance, that we've got some coverage for that. Like there can be some really, really large impacts. Um, yeah, and I think in any given year, it's fairly unlikely that you become disabled. But if you do, that would be a really big deal. And even though we say it's like fairly unlikely that you become disabled, it's probably more likely than you think it is. I think the statistic is that about 1 in 4 workers will go on some sort of like disability claim at some point in their work life before they retire. And that's way more than people probably think.
Yeah, I've seen varying statistics. I think from the Department of Labor, it's 1 in 4 people will incur a disability that keeps them out of work for at least 90 days. I've seen others that for people with disability insurance policies, about 10% of them actually go on claim at some point during the policy lifespan. So part of that is sure, 25% of the population might get disabled, but insurance companies aren't going to offer insurance to everyone. They typically only will insure healthy people. Now, group plans are different. They'll insure everyone at the company. Um, but but hey, I mean, even if it's that 10% number, like 1 in 10, someone, multiple people that will go on claim at some point in their career. Hopefully it's not you, but it could be. That's why you
Yeah.
get the insurance if it is you. Um, and like Rachelle prefaced earlier, a big question to ask with any insurance is if this event happens, could it ruin us financially? The TV? No. We've gone through 3 TVs in our house thanks to our 2 young boys liking to throw things, and things sometimes hit the television screen. Luckily, TVs are pretty cheap nowadays. Um, but if your income goes away, would that be a problem? For most of you, the answer is yes. So if you rely on your income, get coverage. So let's kind of go through some basics here. Income replacement. That's what it is. It really should be called income insurance. I guess it is disability income insurance.
Hmm.
But yeah, if you're disabled,
Yeah,
uh,
it's not protecting your income if you get fired. So,
yeah. So it's if you lose your income due to injury or illness, something rather out of your control. Now, if it's a for cause, like if it's a self-inflicted injury, you're not covered. So there's a few exceptions, and they put them in the contracts. But it's like, okay, that makes sense. Obvious things like if you're committing a felony while you get
hmm.
disabled, they're probably
Yep.
not going to pay. Okay, yeah,
They're
fair enough.
definitely not going to. That's definitely in the contract.
Fair
So don't
enough.
go robbing any banks.
Yeah. Um, so anyways, but yeah, there's two main types of disability insurance, short term and long term. Don't really care about short term. If you can't work for a couple weeks or a couple months, oh well, we'll figure things out. If your
But if you're gonna
employer,
have a baby,
there we
then you
go.
can get it for like just the year you're gonna have a baby and get some extra
Yeah.
income. Hmm.
Typically, you either have to enroll like an open enrollment at the start of the year, and some policies require you to have it for at least 12 months before they cover maternity.
Hmm.
So that's something to keep
Or
an eye
require you to
on.
like be enrolled before you get pregnant. Like that's, I think,
Exactly.
often the thing. Hmm.
So, if you're thinking of starting a family, take a look at those provisions in your group plan that your employer provides. If they provide it
Hmm.
for free, great. Take all the free benefits you can get. If it's something you have to pay for, again, really the pregnancy scenario is the only one that we would argue makes sense. Um, that's why we have an emergency fund. If you can't work for a couple months, we have some savings to live on. But if you can't work for a couple years or the rest of your career, that's where we want to buy the insurance. And that's where long-term disability comes in. And typically, a long term disability insurance plan will have a waiting period of 90 or 180 days on it, meaning you have to be disabled for at least that many days before they start paying you a claim. So it's not going to pay you if you sprain your ankle and have to miss a week of work and you're in a walking boot and you're hobbling around for a couple weeks before you're back to full speed. Like that's what Aflac is for. Um, for the average American that doesn't have $1,000 in their bank account, a 2 week injury where they don't have PTO or they don't have any means to support themselves. Yeah, having that could be beneficial. But for you guys, again, hopefully we have a little bit of cash on hand. And even if we don't, if we can't work for a couple weeks, we'll figure things out. We'll make ends meet. We could, fund living expenses on a credit card and then pay it off once you start working again. Nice thing of being a doctor is most of you earn above average incomes and therefore have the ability to weather some storms or recover quickly if need be. So it's that long-term um, disability that we care about. Benefit amounts are going to vary based on income and also just how much you want to get. So the insurance company is not going to let you insure more than what you're making. The only scenario to have more coverage than actual income is if you secured a policy maybe while you were in training at the standard resident fellow limit, and then you go to an employer that has a very robust benefits package that provides a hefty amount of group disability insurance. In that case, sure, you might have slightly more coverage than income, but that ratio is probably going to flip soon enough with pay raises over time. Um, but yeah, you're not going to be able to insure more than you're making. You might choose to insure less than you're making, which is fine. Depending on circumstances, you might not need all that income. But early on in your career, usually I'm an advocate of covering as much income as possible because you'll find you tend to adjust your life to that income. And unless you have
Mhm.
a bunch saved up and you're ahead of schedule for retirement, probably a smart idea to protect that income. You
Agree.
want to talk about group versus individual coverage, Rochelle?
Yeah. Yeah, I think this is one of those things that people commonly think about. They're like, hey, I have disability insurance at work. Why would I need my own policy? A lot of times, the policies that you have through work, like the biggest thing is that it probably doesn't cover all of your income. So you may look at your insurance details and it might be like, oh, this covers 60% of your income, which sounds decent, right? But then if you look at the details, there's usually a cap, and usually it's expressed in terms of like a monthly benefit amount. So maybe it's 60%, but only up to $10,000 per month of benefit, which is like $120,000 per year annual salary. That's not enough to cover most of your income, probably, or all of your income at least. And then on top of that, the group provided coverage, like if your employer is paying for it, when you get that benefit, taxes will be withdrawn. So 60% minus taxes. So there can be a pretty good chunk of income that you don't have protected between like what your group provides and what your income actually is, like what your take home is. And also think about take home income. It's really anything in this scenario that you're receiving. So like you're getting money that's being put into your retirement plan probably. Like that's still your money. So we want to think about that money. We want to think about like your take home paycheck. We want to think about like what is your employer paying for health insurance? Like those are all things that you're going to have to figure out on your own if you're no longer working and earning an income. Another part that can be very different is just how disability is defined in the policy. So, with most good individual disability insurance policies that we're looking at, the goal is to try to get what's called own occupation coverage. And that means that if you're working or if you can't work and do your own job, like whatever job it is that you're doing at the time you're disabled, then you're considered disabled. So if you're a surgeon and you're performing surgery, and if you can't do that, then you're disabled. But with the group policies, often that is the case for maybe like the first couple of years. And then it says, if you can work after the first couple of years, we're no longer going to consider you disabled. Like, go get a job, earn some income elsewhere, basically. And often, like, you can't necessarily go out and do a different job that earns the same level of income that you were earning performing surgery or whatever it was that you were doing. So that can be very different in group policies and is only in the details. That's not something that you see on the first page where you sign up and see all your enrollments. So taxes are different. How much benefit you get is probably not enough. The definition of disability is probably not quite as strong. but at least it's free if your employer provides it, you know? So it's nice to have some amount of coverage that we're not paying for it, but chances are you need more coverage and you need some stronger coverage that you can get through an individual policy.
And I've seen some employers where they give you the option of having the premiums paid with post-tax dollars. So like on your
Hmm.
paycheck, you have to pay taxes on whatever the premium amount the employer is
Or they
paying
just
for you.
include it on your W-2. Like maybe they don't, yeah.
Exactly. Yeah.
Hmm.
And then in
Yep.
that scenario, in theory, the benefit would become tax-free. Also, with group plans that you have to pay for, the default is typically with pre-tax dollars, meaning the benefits are going to be taxable, but sometimes they give you the option to pay with after-tax dollars, in which case the benefits will be tax-free. But yeah, a lot of other downsides with that group coverage, as Rachelle mentioned. I think a big one is just it's not reliable. If you leave the employer, it doesn't go with you. The employer can change their benefits package. They can cancel the coverage if they don't want to offer it anymore. So you're not in control of that coverage. Um, Social Security disability insurance. If you're paying into Social Security, which most of you are, you'll have a little bit of benefits through that. It's peanuts compared to what you're making. I think the average Social Security benefit in America is like $1,000 a month. I think for you guys, you might be able to collect a couple thousand. But it's not a large sum. It's very hard to qualify for. You have to be really messed up to and like unable to do anything. Like if
Yeah.
you can lick stamps, oh, you're not disabled. Go get a job at the post office. Like it has to be a total disability without expected recovery or a disability that's expected to result in death within the next year. So,
Hmm.
like I said, you're not able to really do anything. And it's not occupation specific. It's just if you can't do any occupation out there, like
Hmm.
you're not qualifying. Some states offer disability plans
Mostly
as
short
well.
term. I didn't really write that down, but like I
Yeah,
think it's short term disability generally is like the state programs. They vary a lot from place to place. And it's like the Social Security disability where it's going to be probably peanuts compared to what you normally get. But it's good to know that those are available and just not necessarily rely on them for something like a long term disability because it's probably not going to be super helpful in those kinds of situations.
for sure. I mean, if you go on claim, get all you can, apply for all of it.
Absolutely.
But yeah, we don't want to be dependent. Oh, I'm in a state that offers state disability. Well, it's probably not enough for you. Um, When should you get it? ASAP, yesterday, as early as possible. Fourth year in med school, I think, is probably the optimal time where you can get a suitable policy that's going to cover your residency income or get it your first year of residency. Basically, you want to get it before you have a medical history. Any health records can impact your ability to qualify for a policy. So, the younger and healthier you are, the less expensive it's going to be and the easier it's going to get. Most people don't get younger and healthier over time. So, sooner rather than later is when you want to lock in policies that are contingent upon your health. Um, Most policies, like I said, health contingent, they require medical underwriting. Companies are definitely more lenient while you're in training. They oftentimes will waive a medical exam. They'll just ask you some health questions in an application, and assuming you have a clean bill of health, and essentially the answer is no to all of the health questions. I don't have any of these conditions, then they'll offer you a policy. If you do have some conditions or have had, previous illnesses or injuries, that'll impact things. You might have an exclusion on the policy. Like if you let's say you play college soccer and you tore your ACL playing soccer, and they had to do reconstructive surgery on your knee, and you've, got a plate where your meniscus used to be. And this doesn't make sense, but pretend you had knee surgery, they might exclude your knee from disabilities. So if that knee is causing problems in the future, they're not going to cover a claim resulting to that knee. But anything else, if you get cancer, you develop Parkinson's, whatever, like that'll be covered. It's just that specific thing that you have a history of might not be covered. Other conditions could either limit features on the policy or potentially make it more expensive to get an apples to apples policy. Some residency programs, it's not through the program itself, but through some insurance brokerages that have a strong relationship between the insurance company and the GME program, have set up what are called guaranteed standard issue plans for all the participants in that program. So if you're at a residency or fellowship program that has access to a guaranteed standard issue plan, those don't ask any health questions. There's really just one question that's, are you disabled currently or have you gone on claim for disability before? And as long as the answer to that is no, they'll issue the policy. It's not going to be quite as robust as a fully underwritten policy, but it's going to have all the core features you want. And they're not going to look at medical history, and they typically have some steeper discounts. So if you're also in training, you typically can get a discount on a policy. And those guaranteed issue plans often have a slightly bigger discount than standard.
Yep. I think one of the most common exclusions that we see on policies is like mental nervous conditions. So if you've seen a psychiatrist, especially if you've had a prescription, like that's probably going to be excluded from coverage on your policy. Like Corey was talking about earlier, like that coverage is generally not as robust anyway. Like you have a mental nervous exclusion, but the best you could have gotten out of the policy is maybe 2 years of coverage for mental nervous conditions anyway. So again, we want to apply as early as possible and get a policy that's as robust as possible. But some exclusions are common, and honestly, it's not a good reason to not get a policy because everything else is covered, right? Like if you have an exclusion, it's just that one thing that you can't like collect a benefit for.
And you
Um,
might have like things that you don't even think of. Like if you have ADHD, that's typically going to
yeah.
result in a mental health exclusion.
Yep.
And you might think, what? Why? That's not like mental health. Well, kind of is. But
Yep.
that might not concern you. Like, oh, I'm not at risk. Well,
Yeah. Like if
you
you're not
might
worried
think
about it,
I'm emotionally stable. I'm not going to go get depressed and not be able to work for an extended period of time. So who cares? Whatever. It's annoying, but probably not affecting me. Great. But you never know. So.
yep. Yep. The one other thing about GSI plans is that if you've been denied for coverage in the past or been offered a policy that was like really, really modified and had exclusions and things like that, you may not be able to get the GSI coverage.
Good
So
point.
if you have any sort of like medical history, like the first thing you should probably do is just look in your email, especially if you're a resident or fellow, to see if you have any emails about GSI coverage and look for that first because that's going to give you like the most comprehensive coverage, and we don't want to like apply through a different company, get declined, and then try to get the GSI coverage and you can't get it anymore, and that's like a really unfortunate situation. And
And
sometimes that happens. The agents that help you with these insurances, they don't necessarily know where all of these GSI plans are, so you can't expect them to know that because they're like exclusive products to like one specific agent. So that's kind of like a thing to look for because they might not know.
yeah, like we have, I think, a GSI set up for internal medicine and the expanding fellowships at Emory, along with, I think, everyone at Rutgers.
Yep.
So like we have the exclusive rights to those plans. You'd have to go through us or an agent that's reached out to us and say, "Hey, can we write this policy?" Um, so like it's one of those through the grapevine,
Yep.
you got to know someone to get access to it type of thing. And
Yep.
it's not like the residency program coordinator is going to be sending out the emails saying, "Hey, here's the GSI." They don't really
Mm-mm.
do a lot of marketing. Some will, but most of them don't do the marketing. So if you don't see anything from your program about it, that doesn't mean it doesn't exist. Ask some peers, some colleagues, some of your older um, residents if they've seen any communication about it. Usually, that communication is getting sent more heavily in the springtime and around the academic year change when you have the graduating residents and the new wave coming in. That's typically when the marketing is heaviest for it. So
Hmm.
pay attention then.
Yep.
Anyways.
Yeah. Okay. So that's a good one to look for when we're thinking about like the details of these policies, which we talked about. Like they're kind of complicated, honestly. There's lots of different features, lots of different ways that you can customize disability insurance. with the exception of like those GSI plans, generally they're like very cookie cutter. Like this is what you get, you're welcome. But with other policies that are like you're going through the whole process, you're applying, etc., you can pick a lot of the different policies. You can pick how long you're waiting between when you're disabled and when you collect a claim. You can pick like if I remain disabled, how long does this keep paying out? Does it pay out until I'm 65? Does it pay out until I'm 67? You can pick like, do I want to make sure that my policy can potentially increase the benefit amount if I am on claim for longer than a year? And they call that like a cost of living adjustment. So, or yeah, yes, increase or adjustment or whatever you want to call it. But basically, like your life will probably get more expensive if you're on claim for several years. And we want to make sure that we can increase your benefit to kind of reflect that. Like your cost of living is probably going to increase. Hopefully, your benefits can as well. There's also, I mean, there's lots of things like when you're looking at this, try to make sure you get as much information as possible. Like one other benefit is called like a catastrophic benefit, which is basically like if you become very severely disabled, you can potentially collect some extra money on top of your base benefit to kind of help with those costs. Like if you need help, like just doing your activities of daily living, you might need some extra support, which will cost some extra money. There's some policies that also have lots of optional riders, like student loan riders. Like if you have student loans, it may pay you an extra benefit to kind of help with those student loan payments. Those are generally kind of temporary in nature. Like we have this rider for 10 years. Um, and then there are some features that are built into policies that are just kind of standard. Like depending on the company that you're working with, there's one company that says, if you are injured but you don't need to go on claim, we'll give you like a little bit of money for that one-time injury one time. Like, yeah. So, and,
It's like
or
a
like if
medical
you,
expense reimbursement. Like if you
yeah.
go back to the knee surgery, like you have some out-of-pocket medical expenses, but you're not
Hmm.
disabled, like they'll reimburse you up to a certain amount for those out-of-pocket expenses. So
Yep. Other ones may be like you can add on unlimited mental nervous coverage if you're concerned about that and you would like to have longer term coverage than 2 years or 5 years. So, there's lots of different details. There's no right or wrong answer. I think it's like kind of look at what makes sense for you. And there do like a little cost benefit analysis. Like a 90-day waiting period is going to cost you more than a 180-day waiting period because the insurance company has to start paying you sooner if you are disabled. But if you have 6 months of emergency reserves, do you really need to pay more money for a 90-day waiting period? Probably not. 180 days is probably fine. So there's lots of different things that you can look at to kind of get the best policy for your specific situation.
yeah, the ability to increase your coverage without medical underwriting is probably the most important. Assuming you're in decent health, that's a mandatory one to add. If you've had some health history, they may not offer that feature. They may want to look at you again before offering you more coverage. But if you can get that increase option, um, that's the way you protect your future income without worrying about health being a factor. So
Yep.
get the policy, the starter policy while you're in training, and then you can bump it up to the big kid policy when you're in practice and continue to increase it as time goes on. Um, where to get disability insurance? Don't just Google cheapdisabilityinsurance.com and go there. I mean, you could, I suppose, but you need to go, ideally, you go through an independent licensed insurance agent or licensed financial advisor that can do disability insurance. And if the person you're working with is employed by or affiliated with a specific insurance company, odds are they're most likely going to encourage you to get that company. Not that that company's bad. They just might not be the best fit for you. Some companies price out better for different specialties, different ages. Other companies, like Rachelle was saying, have special features that you might want that other companies don't have. And those special features aren't usually like the core focus. It's more like a fringe benefit that might be appealing. Like there's one company, I think they still offer it on their new policy, but it has this thing called a family care rider where you can actually collect up to 6 months of benefits on your own policy if you need to take time off work to go care for an ailing immediate family member. So like if you've got a parent that's sick or something along those lines, you might want to, or a sibling. It's like, hey, maybe I get this policy knowing that there's a chance I might be able to use that feature to help them out when they're needing that care. Um, so, uh, but yeah, ideally it's an independent agent that can go help you get any of the insurance companies out there. There's really only a handful that are good for physicians with that occupation's true medical occupation specific language where if you can't do your specific job duties, you're getting paid. And the devil's in the details. Don't just look at the marketing brochure and be like, oh, I've got this policy with a medical definition of disability. Like we're super fancy. Actually read the specifics. And like there's one company that will not be named that markets heavily in the medical community saying, oh, we've got this medical definition, but it's really a lot of mumbo
Google it.
jumbo that doesn't make sense. Um, and it doesn't even have to say like medical specific. The concise version is if you are unable to perform the substantial and material duties of your occupation, you are considered disabled.
Yeah,
Doesn't matter if you
it
can do
is.
something else.
Yeah, it's kind of challenging because like every company like uses different terms for the same thing. So one company might call it like XYZ occupation, the other one might call it like ABC occupation. And when you compare the language, it's like this is the same. Why are you calling it two different things? So marketing definitely plays into this, but do a little research on your own too. And try to get some cost and benefit comparisons. Different companies definitely vary in cost. Corey was mentioning that a little bit, but more expensive does not necessarily mean better in this situation. Like there are some companies that are just historically a little bit more costly, but it doesn't necessarily mean their product is way better or the best fit for you.
Generally speaking, you get what you pay for, but
Mm-hmm.
run the comparison. Like
Yeah,
apples to apples, one company might price out a little more favorably than the other, but generally speaking, the more expensive policy is going to have more benefits, more features, more
right.
likely to pay you a claim if you get disabled.
Yeah, I think that sometimes like the thing that you're paying more for is not something you even care about. I think like unlimited mental nervous coverage is a good example. Like we sure that might be nice, but if that's not something that we're terribly concerned about, then maybe we don't need that feature on our policy. So that's one thing. Um, I think if you are going to earn a lot of money as an attending physician, many of these companies like cap out at a maximum monthly benefit of like 20 to $30,000 per month, or 20,000 is some of them, 25 is some of them, 30 isn't some of them, but it may be, in your best interest to have two different individual policies. And maybe you only have like $5,000 on each of them to start because you don't need that much coverage. But then you have that built in increase option so that when you are earning a lot more, you can increase both of them and you can, have benefits that fully protect your income with more than one policy because one policy just won't do it for you.
Yeah, typically about 500K is about as much as you can insure with one company. And then if you're going to be earning more than that, you're probably going to need two policies to fully insure that income, assuming you don't have any group coverage provided through
Hmm.
work. Like you need to insure the full amount. And then if you're, making high six figures or even seven figures, like there's some non-traditional companies out there where you can get really unlimited benefits, whatever you're willing to pay for.
Hmm.
They might be structured a little bit differently, like a longer waiting period with a lump sum payment. Like, oh, if I'm disabled for 3 years or 5 years, they'll pay me $5 million after that point. Just to rather than a traditional monthly benefit. Where you could just get the standard $50,000 monthly benefit, whatever you're eligible for and willing to pay for. But yeah, they're
Hmm.
typically a little bit different uh, policies than your standard disability policy.
Yep.
Let's see. Now that we've talked about getting it, how do we get rid of it? Or I guess,
When?
how long do we hold it for? Like, the increases, we want to do that throughout our career as long as we rely on our income and as long as we aren't financially independent yet and are still saving for retirement. As most of you have probably noticed, if you're mid-career, life just continues to get more expensive. It doesn't get less expensive. Like we thought, oh, once daycare is gone and once my student loans are gone, it's going to
Yeah.
be so much easier. I'll have so much more money to play around with.
Those
And
silly
just
kids, I tell you, especially if you have those.
yeah, to some degree, yes, we can, the daycare cost goes away and we might get a pay raise and we might be able to save a little bit more for retirement, but the daycare cost gets replaced with activities and
And then you're
soccer
going to
and
start
shin
doing club
guards.
sports and traveling and like,
Exactly.
man.
And then the grocery bill gets more expensive and you go get invited to more birthday parties. And so yeah, it's
Unsubscribe.
yeah, yeah, things just
Sorry.
keep getting more. You need a new car, and car payments now are like over $1,000 a month for just a basic SUV. Um, so you're probably going to need to continue to bump up that coverage as your income rises until you're knocking on the door of retirement and are close to financially independent. And
Yep.
I guess two different things. You could be at a point where you're financially independent and only working because you want to work, which is fantastic. That's the dream. Hey, I'd be bored if I quit working. I like my job. I'm going to keep doing it. I don't need the money though. So maybe I'm going to just stop taking night call or only work 3 days a week or whatever. Yeah, great. We don't need disability insurance at that point. You don't need your income anymore. Um, but as long as you depend on that income, probably want to protect it as best as possible. No one's ever complained about getting too much money. I've yet to have someone go on disability claim saying, "Man, I wish it wasn't this large. I wish it was a smaller benefit because I don't need this much." Like if you're getting more than you need, give the excess to charity. Like you'll figure something out. But no one's ever complained about getting too much money. So, um, I guess maybe a lottery winner in hindsight who like went bankrupt because they didn't manage it correctly and they wished they never won the lottery to begin with. But that's
It's a little
getting
different. It's a
getting
different
disabled is
scenario.
different than winning the
Mm-hmm.
lottery.
A little different. Yep.
So, um, but yeah, hopefully we get to that point where we no longer need that income protection and we can cancel this coverage. So again,
Mm-hmm.
ask yourself that question. Do I rely on my income? And if the answer is yes, all right, let's keep it. If the answer is no, get rid of it.
Yeah.
Very simple.
Yep. I know we don't talk about this probably frequently enough because it's more fun to talk about investing and other things like that, but this is really important and kind of an integral part of financial planning. So if you have ignored this because we haven't talked about it in a while, this is our reminder to be like, hey, go get some disability insurance if you don't have it. If you do have it and you need more, probably look at increasing it. If you haven't like looked at it in 5 years, you probably need more coverage. You should maybe look into that. So just do a little thinking, follow up. You're welcome.
Thanks for listening. We'll see you next time.